Welcome to Stock Talk with Nico Criticos. Today we are going to be going over my bullish thesis for Scotts Miracle Gro. And if you don't know, they are the leader in gardening products, lawn care products, and all different sorts of stuff. So today we're going to go through what they do, and we're going to go through all their financials. We're going to use Nico's stock market checklist, and we're going to see why I am bullish on this company. So right off the bat, if you don't know, their most popular brands are Scotts, Miracle Gro, and they got a couple more over here, like Ortho, Roundup, and Tomcat. So they have all these different brands and all these different things: pest and weed control, hydroponics, gardening, and lawn care. Okay. And so the other thing that makes this company interesting is they're kind of like a value play, but they're also kind of like a growth play, and they're also a dividend play too. But the thing is, since they're a market leader in this industry of gardening and lawn care, that is what makes them safe. But at the same time, they're also investing in cannabis products. And so that also gives them a growth opportunity. And so here we see that they announced a cannabis investment into RIV Capital, which is a Canadian cannabis company. And so they're not directly involved in producing cannabis products, but they're making investments into it. And so that's what makes that segment interesting. Now, a couple months ago, I bought, let's see, if we look at the stock chart, we can see that this company it did really well during the pandemic because everyone was going out and buying their products. And then you can see it came down a lot. And so what I did was I started buying right here, pretty much at the bottom, $144 a share. And so in my main account, though, not my main account, in my Fidelity account, I bought 10 shares at an average price of $153 a share. Okay. And so right now I'm up about a little over 12%, but I do wish I had some more. And so I kind of plan that if this stock comes back down to around 150, 160, I do want to add a couple more shares because I'm very confident in this company. But I do have a small position. Now, if we look at their last earnings report, we can see that sales exceeded expectations, and their sales increased 11% in 2021, but they declined 28% quarter over quarter. Their Hawthorne segment is the hydroponic segment with like lighting and stuff for indoor planting, and that increased 39%. That's also a big driver of growth for the company. It was down quarter over quarter, and then you can see sales growth is expected to be around 0 to 3% for 2022. And so they also announced an intent to repurchase $300 million worth of shares next year. And so that's that. Now, if we get started with Nico's stock market checklist, we can see, is the stock down? Well, since this is a mid cap, it should be down over 35% from its highs. And in fact, since it was $250 a share, the stock is down over 35%. So that is a yes. Next up, we have net income and revenue growth. We can find that here. And as you can see, over the past couple of years, revenue has definitely been growing. Net income has been kind of steady around this $400 million mark. But if you look over the past couple of years, it has grown from 280 to 387. So that's also a yes. Next up, a low forward PE. So, and just by the way, this is a $9.6 billion company. And so their forward PE is 20. That is right around average. It's trading right around average right now. But a 20 is still a low number. So we're going to give that a yes. We'll give that a yes. And then, are they innovative? This one is kind of tough because they're in a very traditional segment of what they're doing with their lawn care, but they're kind of innovative in some of their products, especially with their cannabis investment, their hydroponic investments. And so this one is tough. I would say they're innovative for their industry, but they're not making huge changes to they're not doing anything crazy. They're just, for their industry, they're keeping up, and they have competitive advantages. So that's kind of a yes. How is the management team? So interesting. The CEO right now is Jim Hodgdorn, and he's 64 years old. And so his dad was actually the founder of the company. So he's been with the company for, I think he became CEO in 2001, I want to say. And he was actually behind the merging of Miracle Gro, which is the original company, merging with Scotts in 1995. And that's why you have both segments. So that's interesting. And so, I mean, he's done a great job, obviously, with merging those companies, with growing the company, with think about the brands that this company owns. Ever since I bought this stock, I've noticed so many people's houses that I go to, they all have these products at their house, especially in their garages. So he's done a great job with the company. Next up, return on invested capital. We can find that right here. And the return on invested capital is 20%. That is fantastic. Those are fantastic numbers. Profit margins, we can see profit margins of 11%. Those are good. And so that's definitely healthy. Healthy free cash flow and operating cash flow. Let's see. We can find that right here. And as you can see, operating cash flow has been not the best, to be honest, because I think since they've been making a lot of investments, so that's probably hurting their free cash flow a little bit. But operating cash flow is not, it's kind of been going down the last couple of years. So that's going to be a no. Is the industry growing? Yes, we can find that right here. We can see that the global gardening equipment market is expected to reach $102 billion by 2025. And so this is a company that does a couple $1 billion in sales. So there's plenty of room for them to grow here. And if they're the market leader, they got plenty. This could be a company that, triples or quadruples in the next 5 years. So this is the industry is definitely growing. Now, how is the long-term assets and liabilities? Well, we can see that current assets are higher than liabilities, almost twice as much. And then long-term assets are slightly higher than long-term liabilities. So overall good. And their equity stake over the past couple of years has been increasing pretty nicely. So we're going to give that a yes. That's a yes. This is a yes. And this is a yes. Do they have a share buyback or a dividend with a low payout ratio? Well, they have pretty much a break even for a share change. But they did remember they made an announcement saying they are going to buy back $300 million worth of shares. So that's a good sign. And then the dividend also is nice too. They pay a 1.4% dividend and with a 73% payout ratio. So that definitely gets a yes, because they have both. Who's buying the stock? Insiders, hedge funds. We can find that here. Insiders have been doing a lot more buying than selling ever since this around $190 to $140. They've been buying a lot. Hedge funds have been slowly selling. It's been decreasing, but as far as the insiders go, they've been buying. So we can give that a yes. And then do they have diverse streams of revenue? Absolutely. They have 20 different brands. They're involved in all these different industries: lawn care, gardening, hydroponic, pest and weed control, and now cannabis. Definitely a diversified business model. And so altogether we have 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 yeses. That might be one of the highest I've ever seen. 15 out of 16. Not many companies hit that many points, but that's fantastic they can do that. So yeah, this is my bullish thesis for the company. And I think this shows why they're so successful and why they have years and years of growth to come. So let me know what you guys think. If this stock drops back down to 140, 150, I will be picking up more shares. Let me know what you're doing.